A long time. A lot of people have been talking about Musk and Tesla every month. After going public a few years ago, the business has already split its shares. Talk goes around that a second split is on the way. A lot of top experts and investors are interested in Tesla stock because it looks good. A person like this is Cathie Wood, who is the CEO of ARK Invest. Cathie Wood has been bullish on Tesla's stock since the beginning. She has made a lot of money on it, but things didn't go well in 2021, and she thinks her company is being targeted. She still thinks that Tesla's stock, which is worth $1,300 right now, will hit $1,300 in 2022. Who is after Cathie Wood and why is ARK Invest being targeted? Let's watch this video to find out. Tesla is the only stock in the market that gets as much press as it does. A lot of people who back the company think it's the most important new idea of the 21st century. Some critics think that the stock's rapid rise could turn out to be the biggest bubble ever. As of now, Tesla bulls have won. The stock went up about 750% in 2020, and by the end of the year, it was worth more than $700 per share. Bulls don't think the good times are over, though. Wall Street analysts are optimistic about Tesla's long-term chances. Now, on Yahoo Finance, the highest price estimate set by an analyst is $1,083 per share. This is more than 50% more than where the stock ended in 2020 and more than 25% more than the current price of the automaker. In December, things went badly for Cathie Wood in 2021. Her ARK Invest exchange-traded funds dropped sharply, and investors fled tech stocks that were doing well. ARK Invest's most popular innovation ETF lost more than 10% in December and is now down 23.7%, putting it in the bear market. 6 of Wood's 8 most important ETFs are down right now. The ARK Genomic Revolution was down more than 30% in 2022, and the ARK FinTech Innovation was down about 15%. Last year, Wood, the founder and CEO of ARK Invest, became well known as an investor. ARK's ETFs bet a lot on new technologies like 3D printing and banks, and they won a lot of money. In 2020, investors had a lot of cash on hand thanks to government and central bank programs meant to boost the economy. They quickly poured their money into flashy tech names. It was thought that ARK Innovation ETF would give back about 150%. But in the past few months, many of those tech investments have started to lose money because central banks around the world have started to get ready to stop giving out stimulus money because inflation is rising. A lot of investors are also worried about the Omicron version. A lot of it companies, especially the ones that Wood works with, probably won't start making enough money for a long time. Given that interest rates are likely to rise in the coming year, these companies' long-term gains are starting to look less appealing compared to those in other parts of the market. Steen Jacobsen, Chief Investment Officer at Saxo Bank, says that investors will face less fiscal and monetary stimulus in 2022. This is because the Fed will be pulling back on liquidity by cutting back on bond buying. He also said that it was clear that high-growth companies, whose futures depend on low rates and big top-line growth, were being seriously hurt. The value of Teladoc Square and Coinbase has dropped a lot. A lot of Wood's funds would be doing a lot worse if she hadn't put a lot of money into Tesla, whose stock price has gone up more than 40% this year. Even though investors are pulling their money out of ARK funds, Wood is still hopeful. Last week, she told CNBC that companies that have been in the S&P 500 for a long time are in a bubble because their futures don't look good. We're not alone in the world. Our plans would go through the roof if we were. She said, I think we have yet to start rewarding creativity for what is about to happen. This is where our opinion comes from. When you look at things from a bigger angle, they don't seem so bad. The total return on ARK funds has been about 30% per year on average over the last 5 years. Jacobsen at Saxo thinks ARK's funds will do well in the future, but buyers should keep their original idea in mind. The ARK fund's goal is not to do better than the S&P or the NASDAQ. People who think this way think that the future is all about technology, and that to be a part of it, you need to buy a lot of lottery tickets. ARK Invest has been looked at closely since buyers took out about $350 million. Cathie Wood made two big choices about the economy as a whole that could hurt the ETF after it did very well until early 2021. To begin, Wood thought that commodity prices would drop very sharply in May 2021, but that did not happen. She said it would surprise her if oil prices went back up to $70. Second, technology stocks went down that month. Cathie Wood said she loves how things are right now. She thought the rate of return would be 15% per year. After the price drop last year, she thought she would get a 25% to 30% return at the time. After the loss in 2021, ARK backers are scared. Regulatory records show that Michael Burry raised his bet against Elon Musk and made a new bet against Cathie Wood. Burry's signed car. They said that management had put negative options on more than 1.1 million Tesla shares worth $731 million at the end of June. This was up from 800,000 shares 3 months earlier. Musk and his electric car startup have been accused of making too many promises and not keeping them. He has also said that Tesla isn't worth what it's worth and that the stock price will drop. Tesla stock, on the other hand, have grown by more than 7 times since the start of 2020. Sign also said that as of June 30th, it has put options on 235,500 ARK Innovation AGF shares. Wood's most popular ETF has more than quadrupled in value since the beginning of 2020. It invests in growth companies like Zoom, Coinbase, and Shopify, with Tesla as its top holding. Burry said in a tweet that has since been taken down that Wood's predictions of disruptive growth and transformative technology would not come true. Burry then said that ARK is setting a time. This has a design that can be useful. When you know your history, you will always repeat it. Not if you don't. In the most recent quarter, Sign made a number of important changes to its business. It bought Walmart, Cardinal Health, and McKesson call options, as well as Discovery stock. In spite of this, it did sell its shares in Occidental Petroleum, Meredith, and Zymeworks. Tesla sent out more than 900,000 cars in 2021. In addition, it was a big jump of more than 45%. But there's no doubt that the COVID-19 pandemic had an effect on both output and consumer interest in 2020. Most buyers thought they would make even more money in 2021. A lot of experts think Tesla can get its shares to $1,500, which would make the company worth more than $1.4 trillion. That could happen before the end of the year 2022. Researchers like Cathie Wood, on the other hand, think that a few things need to happen first before owners can get such a big payout. Let's take a look at what Tesla really needs to do. To begin, buyers are interested in growth. The amount of cars delivered to customers is the clearest sign of how well Tesla is doing so far. A strong, loyal customer base has made sure that there will be a lot of desire for Tesla cars as soon as they hit the market. The biggest problem has been the lack of production space. Tesla has tried to solve this problem by building more factories around the world to make cars closer to where they are bought. The plants in Berlin and Austin are almost finished being built, and Tesla seems to have figured out how much they can make. Also, Tesla knows that its cars are essential for the business. The company needs to enter global markets as soon as possible to take advantage of the value of its bonds. The problem is to figure out the best way to do it. For example, India is a big market with a lot of promise, and Musk has said that he wants to get things going there. Tata Motors' stock price went through the roof last week after rumors spread that the company might make Tesla cars on the subcontinent as a contract manufacturer. Tesla will eventually reach more people, but the car company needs to be careful. Giving up quality to get cars out the door faster could be bad for business. A slower rate of expansion, on the other hand, lets competitors get into good areas before you do. This might not be a long-term threat to Tesla's position as the leader in its field, but it could stop the stock's rise. Finally, it looks like the Bitcoin craze taught Tesla investors a lesson that many Bitcoin investors have learned and are holding on to their shares. This way of thinking has been a big part of Tesla's huge share price rise to date, even though prices have gone up and down a lot over the last 10 years. There will be a big rise if those core owners keep their shares, no matter what happens. It's going to happen. Do you believe Tesla can get to $1,500? Leave a comment below.